Okay, welcome audience. The next program point in our agenda is the panel discussion about the future of transaction reporting. We will have a journey through time, looking back shortly on SFTR and then going ahead with Brexit, Mafia, EMIR, refit, and then with some closing words on the industrialization. Today's panelists are Dr. Jennifer Hauschild, manager at Define. We have Nikolay Arnaudov, Senior Policy Officer at ESMA, and Malik, Head of Financial Regulation Market FinReg. Moderated by me, Alexander Becht, Product Manager Abacus Transactions at BearingPoint. But let's don't spend too many words on ourselves. Let's start directly with the content, which is really interesting for the audience. Nikolay, the first question to you. Looking back to SFTR, how satisfied are you with the go live of phase 1 and phase 2? Where do you see still gaps? What was good points? What went good? And where do you see still open discussion points?
Hello, everyone. It's a pleasure to be at the conference. Well, indeed, as you said, SFTR Go Live, it's in the past, though having in mind how the recent months and days actually evolve, I think every event looks very, very much back in the past. No? So SFTR Go Live has, in our view, gone in a quite smooth manner. Definitely has, we have used and leveraged our experience from the start of pre-reporting regimes. And I think this has contributed indeed to this smooth start. Also, let's not forget that the reporting of SFTR originally had 4 reporting start date. Due to COVID, the first one was merged. We ESMA issued a statement to postpone the reporting start by 3 months. So this 3 additional months potentially also allowed entities, both on the market participants, but also TRs, to better prepare, have some more extensive testing, so that they could indeed fulfill the requirements in the regulation. Then let's not forget that SFTR also was born with a lot of technical instructions supporting it, both on the data reporting side, on purely XML technical side, i.e. formats of transmission, all coming from, of course, the ESMA strategy to ensure standardization and harmonization of data reporting. And last but not least, having in mind that the start, as I said, was smooth, but still we are observing what happens with the second wave, and we are expecting the third one. We believe that there is going to be a further push, should be further push from our side and the authority, NCA's and National Competent Authority side, on the increase of the data quality, leveraging on all the tools that the regulation and the regulatory framework has provided us.
Thanks, Nikolay. Sepp, what is your view on it?
Yeah, no, I mean, I'd second a lot of what Nikolay has said. It's gone amazingly well. You know, I remember saying to people at the beginning that everything will blow up. Those were my exact words on day one. Anything but that has occurred, and that's obviously a huge relief. I just would pick up on a few points though, and they are that we need to be really careful about what's popularly called valid but wrong. So the fact that the acceptance rates are really high is obviously encouraging, but does that mean that the actual reported data is correct? And linked to that is the matching. Now we've got 90 whatever fields matching, 63 of them I think currently, and some of the tolerances that were set by ESMA I think need to be reviewed. Obviously the data will show that in time, but for example, principal amount on maturity date matched to within 0.005% I think is a little bit unrealistic, and there's going to be a lot of noise when it comes to the matching. Other than that, just a couple of other quick mop-up points really. Delegated reporting, we need to monitor how that goes. You mentioned how wave 2 and 3 are about to well, wave 2's come in, wave 3 will start next year. Reuse calculation, I have my feeling that not much. I know this came from a G20, sort of Financial Stability Board, but I get a distinct feeling that it's going to be very poor quality, the reuse data. So there's some of the points that I think we need to keep our eyes on.
Jennifer, how do you see it? So you've been with so many customers and clients. You're advising. So what is your view on the reporting stat?
Yeah, I absolutely agree with Seb. We have to be really careful. Just because we have very few rejections certainly doesn't mean that the reporting is completely correct. We've seen that there are a lot of fields that leave a lot of room for interpretation, so counterparties are simply interpreting fields differently. Thanks to the COVID-19 postponement, obviously there has been a lot of interaction. A lot of market participants have been speaking to each other. They've been speaking to trade associations, and we've just seen that still on a lot of fields, even though there is a lot of guidance for SFTR, we're still lacking guidance on certain aspects. Seb has already mentioned a few. For example, the cash reinvestment and reinvestment rates. Of course, we don't have to match these, but still there's lacking guidance. People don't really know how to populate these fields. Also, there's been a lot of guidance as to who has to provide the UTI, but it was never discussed how they should that should be exchanged. So a lot of counterparties are struggling simply with the exchange of UTI. So we're actually seeing a lot of trades being unpaired simply because everybody reports with their own UTI. And there are certain other fields that just, we're still waiting on a little bit more guidance. So I think we'll still have a couple of months of finding the right groove.
Yeah. And Nikolay, will you update the guidance?
Indeed, as usual in any reporting regime, we are mindful that there is a need for guidance, and indeed, as the reporting goes on, new issues arise, of course, new interpretation. So this is something which actually we are working on, and on our website, I also would share this with the people who are attending the conference, and of course everyone. ESMA publishes on its website, following a review of the ESMA regulation, we publish all the questions on which we are working to provide clarification. Therefore, one can easily have a transparency on which ESMA is working. So we have currently announced that there are quite few issues related to reporting of settlement fails, reporting of zero collateral for margin lending, etc., on which is working. So indeed, there are some issues for clarification, and I would also ask. I cannot more than agree with what Jennifer and Seb said about the valid but wrong. This is something which, for instance, now, and we would speak afterwards on the refit, but this is one element on which indeed we believe that there is a further work that could be done both on the regulatory side and also from the trade repositories to be able to facilitate the tracking of those valid but potentially not fully accurate reports.
Thanks a lot. Let's move on to the next topic in our timeline. So we are close before the Brexit becomes reality, finally, some people will say, as there have been so many discussions around that. Seb, how should as you're based in London, you're directly close to the authorities there, how should the industry prepare themselves for the Brexit? And how do you see potential deviations between the FCA and the ESMA in future?
I mean, this is, really is the hardest question out of the lot, because it's the great unknown. And, I've been hanging around a lot of the investment banks, and they have a lot of, for want of a better word, lobbyists in, the capitals trying to decipher what's going on. And I think everyone has all but given up on trying to understand. So much is unknown. It seems as if we are heading to what's called a hard Brexit. Remember, Britain has already left the European Union. We are no longer a European Union member. However, as part of that agreement that was signed, there was a transition period where Britain is kept aligned to EU rules, and that will expire on the 31st of December at 11 p.m. UK time. So at the end of this year, we will no longer be officially aligned. Now, the question is what happens on the 1st of January 2021? We need a deal. A deal means that there will be some sort of equivalence or equivalence plus, which means that we continue to mutually recognize CCPs, trade repositories, a whole range of different passporting services. Remember, MiFID is not the only passport. There are many passports for different things. What do I think firms should be doing? Well, I think it's inevitable that there's going to be a hard Brexit. And by hard Brexit, I should be a bit more specific. By that, I mean a minimalistic deal Brexit. So we're already seeing this being fashioned. CCPs are now being mutually recognized for a time period. The FCA is now having external countries having this sort of temporary passporting regime. And we're probably likely to have some kind of bare bones sort of agreement there. Now, we obviously are concerned about the derivatives trading obligation, because if there is no deal and there's no equivalence or anything similar to that, then that means that the UK is a third country now with no equivalence. So that means under MiFID or Mafia, you cannot trade, the EU 27 cannot trade derivatives on UK trading venues. So I know ESMA, Nikolay, I know in a minute you might have a few words to say on this derivatives trading obligation. Is there any work being done there, and is there any sort of bit of information that you can share with us? Equally, shares can't be traded or wouldn't be able to be traded on a UK trading venue. ESMA's done some great work there by putting out information to say that only affects, I think, about 1% of trading. So probably not too bad. In terms of the second part of your question, Alex, about the divergence, I think you sort of touched upon or alluded to. That is obviously a big issue, is that to what extent, I mean, what we're going to now have, it seems, is two reporting regimes, an EU MiFIR, SFTR, EMIR, and a UK equivalent. Now, already, we can see that they diverge slightly in that under UK SFTR, non-financial counterparties will not be reporting, whereas under the EU SFTR on January the whatever it is 21st on January next year, they will start reporting. So there's already a small bit of divergence. Now, how much will they continue to diverge? To be honest, I think that's more of a political question. It's what will the politician, what trade deals will the politicians strike, and how much will they wish to have extra flexibility? Because obviously the other trade deals, they'll be negotiating financial sector issues, and they may feel, the British government, if there's a more lucrative deal to be done somewhere else, they'll be prepared to diverge. So it's impossible to answer, but companies should be aware that there is a very realistic chance of divergence. So any solutions they build, I know we'll talk about that later, need to be flexible enough to accommodate ongoing divergence.
Yeah, Jennifer, to keep some budget in the projects, right? To be aware and prepared.
Yeah, absolutely. So it's not just going to be a one-time implementation following the transition period and you're done. So you don't just connect to a different recipient and then have two identical reports, but you'll constantly have to monitor how the two regimes drift apart.
Okay, Nikolay, will we have an agreement between UK and EU on the third country topic, that the London Stock Exchange is declared, for example, as an EU equivalent marketplace?
Well, this depends, as it was mentioned, on several aspects. Of course, the political aspect should not be taken as non-important. Actually, potentially is the most important one. Technically, indeed, on most of the rules currently, there is full replication between the EU and the UK. But there is, of course, the expectation that the reason for the UK to leave the Union was at some point in time them to take their own decisions and therefore to diverge. No, on that, what I can say is that indeed most of the obligations that are relevant, ESMA has been working or is continuous working to provide further clarification on the market. We have been issuing statements, and we continue issuing statements on Brexit, providing guidance to the market how to what are the expectations towards the market around Brexit. Let's not forget that, as I've said, indeed the UK actually left the Union on the 31st of January this year, but still there was a transition period until 31st December. So it's not the first time that Brexit happens. It is indeed now the first time where indeed we expect the no deal Brexit actually to happen. and hopefully the guidance that has been provided so far to the market would support entities, counterparties, market infrastructures to have also a smooth transition towards it. We also know that this has led to a lot of preparatory work at companies, and this is still also something to be observed. What is going to be the actual balance between the United Kingdom and the European Union in terms of entities, establishment, operations, where they're going to be focused, how the different markets are going to be served, etc. So there is still a lot to be seen, I would say, in how the industry will behave.
Thanks a lot. So the next step in our timeline is we're all expecting the final report for the so-called EMIR refit with the revised and harmonized ITS RTS. Jennifer, how big will be the impact for the industry?
Yeah, so as you said, the draft RTS ITS have already been published, so we have a fairly good idea of what ESMA expects to change. There are a number of larger changes I would want to make market participants aware of. So the first, I believe, is the change in data format. So we're introducing the ISO 20022, which we've already seen for SFTR. I think that will be a fairly large technical implementation for market participants, or at least all of them who aren't using a standard reporting software, who will then hopefully do that format change for them.
We will.
Another big change that we're expecting to see is the number of reportable fields. So according to the draft RTS, there's about 17 new reportable fields introduced. The reasoning behind that is mainly to give reporting counterparties the opportunity to describe certain more complex products in more detail. For example, there are new identifiers for cross-referencing different transactions. There are new means of describing package deals, for example. So there will certainly be a change in mapping and having to analyze where all the reportable information is coming from in your source systems and making sure that you correctly report and map those new fields. So that will be a technical implementation that market participants will have to be aware of. There is also a fairly big change to the way that lifecycle events are reported. ESMA introduced a new field, the event type. So in combination with an action type, you are able to describe lifecycle events or business events that are occurring that have led to a reportable transaction in more detail. We've seen in the past that it's not quite trivial to identify what exactly has happened to a trade in your trading systems and map that onto a reporting format. So that is certainly something that will require some work. And I think a final change that I would like to address is that ESMA are discussing doing an initial load. I call it initial load. It's actually just the uploading or updating of all outstanding trades on the reporting start date using the new fields and new formats. Now, a lot of counterparties have already done that back in November 2017 when the first EMIR review came into force. I know back then it wasn't a requirement to do this initial load, but a lot of counterparties did it. I personally advise to do it simply because you sort of create a level base, which is very important going forward. But back then we saw a lot of problems with having to enrich legacy trades with data that potentially wasn't available when the trade was initially concluded. So you have to see how to get that information into your trading systems in order to be able to report. And after that was done, we also saw a lot of rejection simply because a lot of counterparties who are not obligated to submit daily valuation updates had lapsed LEI. So on the day of the initial load, when all of the outstanding trades were reported, there were a lot of rejections because of lapsed LEI. So all of those are problems that will have to be considered, especially if ESMA decides that the initial load is something that is absolutely enforced and everybody will have to do it. As I said, I think it's a good idea, but it's just associated with certain complications that need to be aware of. And yeah, lastly, maybe important, there's still draft RTS, so the European Commission hasn't approved them yet. They're still under review, so we can still expect to see certain changes to them. I, however, wouldn't necessarily. I don't know whether Nikolay wants to touch on that a bit further. But yeah, so there's a lot to do, and the go live, which will be probably towards the third quarter of 2022, as Alex, you mentioned already. It's not a lot of time to do all of the implementation. So market participants should certainly think of starting their first projects soon.
Yeah. Speed up and ramp up the projects and budgets. And Nikolay, just a quick comment on that. Are we right to say Q1 21 for the publication of the final report and Q3 22 for the go live?
The publication of the final report and the draft technical standards should be indeed happening between the end of this year and the beginning of next one. So already with this one, we have requested the Commission to accept the standards being provided them with a delay of 6 months, because as you remember, the original date was 16th of June. Simply it was impossible to have technical standards under EMIR together with go live of SFTR, as it was at the time. Then in terms of the initial load, indeed, also one can check it with the public feedback, because ESMA, when we closed the consultation in July this year, ESMA is obliged, if the feedback is public, the respondent has not required confidentiality of it, to publish it. And actually, this was one of the elements which one could see that has had a broad support. Of course, there are some tweaks, as Jennifer said, that might need to happen there in order to ensure that this happens in a smooth way. The only other aspect on which I wanted to draw the attention of the new standards, the technical standards under EMIR, is indeed they include new fields, but those new fields actually come from the global guidance, i.e. this is something which should further streamline the reporting by entities which are present in more than one reporting jurisdiction. This, for instance, can also be the case with the United Kingdom, because they're also part of have been part of the so-called CPMI IOSCO work on harmonization of reporting, and specifically the implementation of the critical data elements. And last but not least, the other element which I already mentioned when speaking about SFTR is the warning on data quality. ESMA is putting quite some structure to support better quality of the data and address what was referred by my colleagues as valid but wrong. So in this respect, under EMIR, we would also expect to have so-called warning reports. Indeed, this is something which it still has to be defined in a greater detail, but we would expect the TRs to provide some, not only rejections of reports, but also warnings if a report is valid by the rules, but there might be something which can be outside the expected values, and where counterparties would be asked to confirm whether this is the case, this is the correct report, or there have been some type of fat finger, etc., error in the reporting.
Thanks. Thanks, Nikolay. Thanks, Jennifer. Seb, one topic where you're really passionate about is the NCA enforcement. For example, to give an example, the German NCA BaFin implemented the pending Q validations in October this year, almost 3 years after Mafia went live. Can you explain a bit on the NCA enforcement, and how do you see the current data quality, fines, enforcement from the NCAs?
This is the biggest missing part of the jigsaw, and it's probably the least talked about, unfortunately, because most people are involved in projects, doing the stuff, ESMA writing the standards and what have you. If you remember back to the Lamfalussy process, to just get a little bit technical, you have level 1, 2, 3, and 4, right? Legislation. Level 3 is the guidance. And everyone seems to stop there. Level 4 is about enforcement, and that's not happening. And you know, I've got a long academic paper that's actually due to come out in a journal in the coming months. I won't bore you with the technical details, but to put it simply, if you take data that we acquired from both ESMA, released its MiFID II and MiFIR fines and sanctions data from NCAs, and we separately obtained through freedom of information requests from the FCA, the UK's regulator. Putting it all together, this is the picture we get. Last year, Germany issued a grand total of 0 fines, €0 for MiFID II breaches. The UK, in its first year operation of MiFID II, 2018, issued 1 fine for £60,000. And last year, the second year operation, they only made 3 sanctions, and that those were for transaction reporting. So in other words, the entire universe of MiFID II, investor protection, best execution, product management, product manufacturers, distributors, you name it, go through the whole suite, okay, of MiFID II projects. Just cast your mind back to 2016, how much work was being done and getting yourself in line for MiFID II, Mafia, and there's been no enforcement effectively. And for me, that's the massive sort of own goal. And there are reasons for that. Very briefly, back in 2010, when the European Commission was soliciting feedback, they said, quote unquote, that introducing civil liability, in other words, making a firm liable for its breaches so that you can sue. So imagine you don't get best execution and the firm is continually ripping you off. At the moment, what do? Short of fraud, the answer is there's nothing you can do, because all of that masses of legislation in MiFID II has no civil liability, right? So you can't go to the court and say, oh, look, you've breached MiFID II. MiFID II says you must give me best execution, obtain the best possible result, and all of that lovely investor protection stuff. The courts will say, sorry, there's no civil liability. Go to the FCA or your national regulator. Now, the Commission said back in 2010 that it was essential, and I'm quoting them there, I've got the full long quote in front of me on my screen. It was essential to have civil liability. The European Parliament put that in when MiFID II was passing through the legislative process. The Council objected following complaints from individual member states, and they removed civil liability. So now we're in a situation where the only way you can obtain your rights under MiFID II is to make a complaint to the national regulator. And as I've just demonstrated, the regulators are not issuing fines and they're not really enforcing it. Now there's a lot I could say, but obviously we've only got a certain amount of time. So that's my biggest complaint about MiFID II, is that the great work that was done in extending investor protection, adding transparency, really, really good MiFID II. But the own goal was scored because there's no way to enforce any of this stuff. Yeah. And the regulators clearly are overstretched.
Okay,
so that's,
thanks a lot. So we would have the possibility with MiFID III and MiFID II to change that game.
No, but just to jump in, Alex, sorry, very quickly, that's not going to happen because the Commission has already consulting on the matter, or they've closed the consultation now, and they did not ask that question. And I actually make reference to that in my paper about how they completely bystepped that question.
So, what I wanted to go ahead with is the MiFIR or MiFID III, MiFID II consultation papers. And Sepp, you mentioned already, it's still not in that you can enforce or that you can sue the companies which for the breaches. There's no NCA enforcement. But what else can we expect, Jennifer, from the consultation paper on MiFID III or MiFID III, MiFID II?
Yeah, so MiFID II, Mafia obviously is a huge regime. There are a lot of aspects to it. So obviously there are also already a lot of consultation papers, and there will be even more. So all of the different aspects are being consulted on separately. So yeah, the consultation started around about the end of last year, so 2019, the first consultation papers were issued. Back then they were centered mainly around investor protection topics, product governance. Most recently, back in September, the first consultation paper on the MiFID transaction reporting was published. So there's a lot of things happening. Maybe before I go into the different reviews, what I want to mention, which is a lot more imminent on the horizon, is the MiFID quick, or the MiFID II quick fix as a result of COVID-19 pandemic. So the European Commission has issued some proposed changes to the directive, which should in theory be finalized between the Commission and the Parliament towards the end of this year. They will then have to be translated into national law and will become effective within 12 months of the actual finalization. So market participants can expect first changes to be implemented by the end of next year. So that's a certainly more immediate change or implementation requirement in line with MiFID II. Also here, as I said, basically the reason for these changes was the COVID-19 pandemic and reacting to it. So the topics that are covered there are mainly investor protection issues, so that there will be, for example, an opt-out optionality for professional clients out of certain aspects of the MiFID II requirements. But I don't actually want to go much further into that, because obviously we only have a limited time, but also going back to the MiFID II Mafia review, there are so many topics that I could talk about, so I'm going to limit myself to two of the things that I think will be most interesting. The first will be the improvements to the pre and post transparency, post-trade transparency. There have especially been consultations on introducing new transparency requirements with regards to non-equity instruments, so that will be certainly very interesting, and especially SI traded products, so there will be an increase in scope. Also, discussions regarding a consolidated tape will certainly be something that market participants should be interested in, simply because it'll create the single source of transparency information, which would be beneficial. Although going back to the changes that I would like to see, or things that I would especially welcome if they were to be introduced in line of the review, are things regarding the transaction reporting Mafia. So what we have been seeing in the past is that counterparties are struggling extremely to identify eligible products. So identifying whether a product itself is traded on trading venue or the underlying is traded on trading venue. So there's a lot of over-reporting happening, and we've seen that the National Competent Authority of Germany is actually contacted a lot of reporting counterparties saying, okay, you're over-reporting, why is that? I think the problem is that the financial instrument reference data system, the FIRDS database, which is meant to be a reference data system, is, well, the data quality is still lacking, and I'm honestly hoping that the Mafia review will sort of introduce changes that will help make that reference data system a little bit more reliable and more usable. I think especially FIRDS should and could be used also for as a reference database for other regimes. For example, in SFTR, a lot of counterparties were struggling with reporting things like the LEI of the issuer. That is obviously something that could very easily be introduced in FIRDS. It is already there, but it's not the main source of information. So a lot of counterparties have that data available, but they're not using it. So I think an improvement of the FIRDS would definitely be a step in the right direction for a Mafia review. And going back to the eligibility, if FIRDS or another means could be used as sort of an eligibility database, so counterparties can more easily identify whether or not a transaction is reportable, that would be brilliant, especially now considering the Brexit or the end of the transition period, when nobody is quite sure whether venues will become third party or equivalent venues. The whole traded on trading venue will become much more difficult to identify. So any improvement there that will help, yeah, identify eligibility will be a great win for everybody.
So definitely a topic where we can spend hours on to discussing the whole regimes of MiFID and MiFIR. But let's move on with the final question of our panel discussion.
Alex, may I just add a few words here on the NCA side and the review, simply because this is indeed, I don't think that there is much more to add on the MiFID II, MiFIR changes, and indeed updates to any reporting and reference data system are absolutely let's say useful for the market, and definitely this is something at which we are also looking at. Let's not forget this thing about the valid but wrong. So this is indeed something which when it goes beyond certain elements which can be controlled, indeed it's a bit more difficult, and it requires also a lot of work to ensure such quality of data. And on the enforcement, just to bring it to the attention that indeed it's not something that it is something which currently also ESMA is doing together with the fellow regulators to enhance the supervision of data quality itself, and then the enforcement. Indeed, it's part of the national law, and indeed there we can see all the idiosyncrasies of the member states, where the different countries in the different legal systems in every country have implemented or allowed for the implementation of the enforcement in a different way. So in some cases, indeed, there are already pre-enforcement, or there are a lot of pre-enforcement enforcement actions, which then require quite some time to happen. So indeed, most probably we are going to be seeing in the coming years the result and the outcome of those enforcements, which in some cases may take up to years to be solved. And that's why, for instance, there might be some additional work to be done indeed to streamline this process.
Thanks a lot. Let's move on with the final question to all of you. We've seen a consolidation of the vendors or the market participants, market infrastructure. We have the wind down of CME Group with the ARM and TR service. We have the sale of the regulatory reporting hub from Deutsche Börse to market access with the infrastructure of TRAX. So they would definitely migrate or integrate both systems. Nikolay, are we working against a monopoly of one TR with a cost-related approach?
Well, indeed, the two elements, cost-related approach and multi-TR, were already enshrined in EMIR, same in SFTR as part of, let's say, the two balances that exist in the system. For the time being, indeed, what we are observing is that there has been a process of consolidation. Indeed, one can argue that in the beginning there were in the EU there were probably too many TRs for the market that existed. Currently, of course, there are some new reporting services that are added to them. From EMIR, we go to SFTR. Potentially, some of them also we know support other reporting regimes in other jurisdictions or other EU reporting regimes like REMIT. So indeed, we understand also that the market infrastructures are finding their way, and indeed there it's more about the business initiative and what is relevant for them from a strategical perspective. On the cost-related approach, this is something which we believe that makes sense when we speak about obligations. So when there is a service which is mandatory, i.e., you need to use that service, indeed there should be a level of control over the prices that are being charged there, and at least for the time being, the cost relatedness per se has not caused a lot of issues. What we are observing is that in some cases the cost need to be better assessed, and there have been several ESMA reports on that. But all this being said, let's not forget that the way to which we are going is standardization and harmonization of reporting, which basically would mean that at least this is ESMA expectation, that no matter how many market infrastructures you have, you can use them indistinctively, and there should be a minimum change for the market participants to use one trade repository or another, because the reporting currently it's under Mafia and SFTR, but in the future also under EMIR, should be done in exactly the same way, no matter which is the trade repositories and the trade repository used. And of course, then we also need to look probably at entities which are outside the scope of the regulation, where indeed might be some additional work to be done.
Thanks, Sepp. You also advise some trade repositories. Can they survive? Can they be profitable with the service, with the cost-related approach, or do they have to invent in new services?
Very, very good question. Yes, I should first put a disclaimer. We are actually in a partnership with a particular trade repository, so we've got a pretty good idea of what's going on in the trade repository space. I think that somewhat controversially, costs actually, or charges for the trade repositories need to go up a little bit. I do agree with Nikolay that this is a mandatory service. So just like with clearing, there are non-discriminatory access, all of the rules coming from Mafia. Similarly, for the other regimes, there needs to be some control on costs, because you can't on one hand say that you must report, and then on the other hand, charges go through the costs are through the roof. So I agree with the approach of ESMA. I think that's sound. I just think that they need to be a little bit more flexible in allowing trade repositories to rise their costs a little bit more, because what we don't want to do is go down the US route, where one trade repository effectively exists for all manner of reasons. I think that's wrong and dangerous and bad for the industry. So prices need to go up. The second thing is that there needs to be a little bit more clarity, I guess, from ESMA about what trade repositories can and can't do in terms of added services, because I know that there are quite a lot of added services. As I say, we're in partnership with One Trade Repository, so we have all manner of discussions about how we can do added services, and they're very nervous to do themselves added services because ESMA, sort of taking SFTR for example, at the beginning was telling them that, you know, you can only accept in XML format and you can't do added services of this and that. And then the narrative somewhat changed. Now, whether that was because the trade repositories had gotten it wrong or because ESMA was giving the wrong signals, I don't know. But now they're sort of beginning to do added services to try and sort of, you know, increase their revenue a little bit. So I think there could be, to be specific, I think there can be some clearer guidance from ESMA as to where the boundary lies between their core TR functions and what kind of added services are acceptable for a TR. You mentioned in one of your previous answers about adding an extra report, you know, to try and cater for valid but wrong, you know, fat finger, obvious errors. So these kind of things. I mean, another one could be, thinking off the top of my head, for example, those trade repositories, those clients who are making, you know, egregious errors consistently. The trade repositories obviously have that data. Would it be acceptable, for example, for a trade repository to analyze that data and then reach out to these clients who are making consistent bad reports and say, look, we can give an added value service here, and we can, you know, send some of our experts down and help you solve your problems. They're very hesitant in doing that at the moment because they're not sure if that's ultra vires.
Yeah.
So, yeah.
Okay, thanks. Jennifer, in which TR would you invest your money?
Oh, that is a very mean question. I'm not going to comment on that.
You want to have cards. You want to consult for all of them.
Yeah, but to be not so mean to the question, what is your view on it? The TR added services, TR landscape, consolidation. Is it hard for the industry to find a sustainable TR?
Yeah, I absolutely agree with what Seb said. I'm also very weary about giving the power over all data to just one single source. I know there's been other countries that have shown that it works. I'm not sure that it's a model that works well for the EU, and I think the problem is because there simply isn't any money to be made in offering ARM or TR services, so you're basically operating at cost or even below. Vendors are kind of forced to offer different information, and obviously data is power, so I think we're kind of forcing vendors to sell data that maybe they shouldn't be selling. I don't know, I think it's a difficult topic, so
difficult topic. So we have definitely something for the next year's RegTech convention to discuss about vendor consolidation. We might see more changes in the market. I have to say very much thank you to Nikolay, to you, thank you to Jennifer, thank you to Seb for the very, very interesting panel discussions, for your answers, for your comments, for your thoughts and insights. Very helpful for our customers and the industry. Thanks a lot to that. The next program point will be the product update. We will have first a lunch break, and afterwards you will see us and me and the product owner Nora Müller on our product update. Goodbye and have a good lunch. Bye-bye.
Dankeschön. Tschüss.
Thank you.
thank you. Bye, everyone.
Bye.